Hello, good large cap stocks for swing trading. How to find upward trending stocks. If you have Charles Schwab, I'm going to use Charles Schwab to illustrate that. If you have Charles Schwab, you'll go to your Charles Schwab account and on the top you'll click on research. So under research there is a stop screener that you'll click on, and it will take you to a page that you'll have different type of criteria to choose from. And one criteria I like to click on is basic. So when you click on basic, I like to click on market capitalization and stock exchange. So pretty much by trying to look for good stocks, large stocks to trade, there are few things I like to eliminate. So if the platform you are using is giving you the chance to eliminate some stocks that you don't want in your watch list or in your master watch list of stocks library that you like to pick from to trade, you might want to use that opportunity. So stock exchange is for me to eliminate in over-the-counter stocks. So I will pick New York Stock Exchange and NASDAQ, and automatically from 5,652 large cap stocks, it will narrow it down to those for me. So market capitalization, you have all those, but again, as a new swing trader, I like to start with large cap. They do not fluctuate too quickly. If you are busy with job or with your business and you are not able to analyze the chart on a daily basis, few days, few weeks, who knows, you can still, if there is a stock that you like to buy that is well set, you like to buy, you can still see it. For instance, I have these stocks here that I purchased like maybe in the price is on the x-axis and the arrows at the bottom shows where I purchased it, and I purchased it on March, but guess what, when it was going up, but it pulled back again a month later, it was still there. So if for instance this was going down and you like to buy it, but you didn't analyze it on a daily basis, maybe for a month, who knows, you could still find it at a point that you could still enter the trade, because the best option to enter this trade will have been the green bar somewhere here, because you have an uptrend. You start seeing higher lows. This red bar is higher than this one, which is higher than whatever it is here. So the red bar are the pullbacks during the weekday, the day where the price at the end of the day is lower than the price in the morning. And today is September 26, 2025, and the market closed yesterday on green, meaning the price in the evening was higher than the price in the morning. So that bar will be green. So you want to buy at the first green bar that follow a pullback, a first or second green bar. So in this instance, it was only one green bar, and then you have another pullback there, red. So, and you could well have the chance to get into this trade. Even if I purchased it a month prior than you'll still buy it at a good deal. If you are using option long swing trading strategy, you'll pay more than I pay, but you don't have to see a negative in your account. Okay, so That's why I like to go with large cap. They are more stable. They do not fluctuate too quickly. You are not going to lose your money too quickly. You are not going to make a lot of money too quickly either. And once you are comfortable with your strategy you are using, you are able to find some stocks that are working well with it. Why not? If you have time, you can try other cap as well to see which category of market capitalization is best suited with the strategy you are using. It's not like be done deal with it all things. It's like make a routine out of it. Make a life routine out of it. It's something you will be doing that things. It's not like make money and be done with it, but make a routine in your daily life type of things. So then you have time to try others, but just start with one that is safer for you to work with. So if you want, you can try to go to eliminate some price as well. I don't, but you have the option, and I just click on it to have those options that you have. So if you select some equal, eliminate. Let's say you have a small account, you just start. Why not? If at the end of the month you can only come up with $60 to invest in your brokerage account, you can choose to have things that cost between 20 and 60, for instance, type of stocks, and just narrow your pool that way to begin with. And over time, you can even allow them to show you them all. And then from there, on your spreadsheet, you can select the one that are, within your budget, how much you want to spend per trade, per share to begin with. Start with 1 share per trade if it can allow you to pay your brokerage fee after trade and still have some profit. Even that's just $1 profit, net profit at the end, it is okay. You are just trying to test the strategy you are using to see if it's comparable, if the stocks you pick is comparable with that strategy. So you want to be able to have your money to buy most of the stocks on your watch list to see which one are working well with that strategy to keep on your watch list, which one that are not working well for you to take out. So stretching your money between them by just buying one share when one is sell well for you to buy, I think that might be a good way to go. That way, you are not risking too much of your money as you are doing your internship. If you put yourself through an internship, doing it that way and making money along the way as well. You are getting paid. It's not a free internship. You are getting paid by learning and doing it at the same time to develop your strategy, fine tune it, create your watch list, and get paid along the way. So once you select those criteria, you can just it will just pretty much, I think if you are doing it, it's going to first show you, like, if that's just large cap, you'll have about 11,000, but then you put those criteria in and then it will keep narrowing the pool. So even though we have bigger pool here, we end up having, then it came down because maybe few more of those large cap were around here, those two that we didn't want. So it narrowed down to 300 or so. So when you click on view match, it will show you the list, and you can just print it. That'll just be like a PDF though, or you can export it as a CSV and save it, and save the spreadsheet as an Excel book. So once you have it, then you are going to start analyzing them one by one with other criteria that you might have yourself. So for instance, and I recorded some videos to share with you how you can create your own watch list. So you'll have your master list, and then you can have criteria in terms of when they went public, for instance, and just pick some year that you don't want stocks that went public after that year, just to make sure they were able to go through at least one recession during the history, their lifetime, and survive it, to just have a confirmation that they are strong enough to hold, to stand up during future recessions. So, and you are going to be analyzing the stocks and just see which one are growth and deep. I like to say that one they have jagged teeth, and which one that are upward, but they all are going to have some upward to them, oblique feel to the trend, but some of them will be big growth, big dip type of things. And then you can just see the one that you have good feeling with. You can just name them. You are just reading them yourself, and as you are analyzing them, after a while, you'll maybe at the beginning you might be more flexible with the beginning that the chart that you analyze, but after you go through, you will be more strict with the others based on, because you will see some chart that are very good, and then you see some chart that were kind of okay, but then over time, as you are seeing them over and over and over, you will be using the one that were kind of very good as the benchmark to rate the others. So if you are analyzing the chart and you are seeing some good one, you can take a screenshot and just put it on a Word document or in your spreadsheet so that you can go back and look at it and compare to some others. So when you are doing the analysis though, here we are using Thinkorswim platform, which is free if you have Charles Schwab. And the only things I use it for is to analyze chart. If I want to buy or sell a stock, I go to Charles Schwab account to do it there. But it's good to use maximum monthly chart. By using that, you'll have the chart very small, and you'll have multiple years in front of you, and you can just have a feel for the chart. One way to do that is when you put your mouse at the beginning on the left of the chart, you will see the price you put, and then you can compare it to where the price is right now. So do you see the price here to here? There is a big difference there. That is a growth. So now between the two prices, you can see the wave that the chart is making to see how is it doing it. So it's upward. But instead of using this, we are going to use the stock of today. So today stocks, and today is the 26th, TJX. So TJS, you can see compared to the stocks that we are just looking at, you can see the difference in the chart. And from here, you can just trace the line going by the support, the higher lows, the bottom of the mountain. Because the chart is drawing some mountain, you want to trace from as far as you can go to see where that will go. For instance, if you started from here, you will just see the bottoms that it can touch. It's going to take you, you are going from the past to the price. So that one takes you there, took you there, or takes you there. You can, and then you can see, okay, so from here where that will go is currently close, so we are now going to take that, and then you can just take it from here. It touched that base and it went that route. So, and then another one went from there, and what, so pretty much you are trying to go to the price, and you are trying to go to the current price. Once you got them traced though, you'll ask yourself, okay, so you can see this one is quite sharp compared to this one, for instance, and this one. So which one is most likely to be the valley of the mountain? That is a question you have to ask for yourself to see that by trying to figure out which one the price pull back to often. So maximum daily chart will be the next one to go to, and sometimes here you'll be able to adjust the line by activating it and then adjusting it if you didn't get it close to the lows that you want to connect it to. But you'll notice that it touched base with that higher up, but we don't know if it's going to keep doing that or if it's going to come down to here. So if you are not sure, just continue looking. Don't take any action. Last year in 2024, we traded using shorts up to long swing trading strategy. But this year, we are going to use long up to long swing trading strategy. It has not gone back down to this line that we color to buy at. We color both, but we don't know if it's going to continue going up from here or if it's going to come down to this. Sometimes the past can show you that it does make a wide mountain. If that's the case, then you will prefer to wait on here. For instance, when it touch base there to touch base here, we have, those are the years that it lands. So we have 1, 2, 3, like 2 years or so before. But from here to now, we have 1, 2, 3. Okay, see, this is the 4th year. So we don't know if it's just going to keep. This is not quite a wide mountain here, or it is, but again, when you are not sure, just keep looking. Alternatively, let's say it fall back. You see the way it came back to this, came back again. If you think this is going to be the mountain valley, then when it comes back to and start going up, you can buy one share and see that what will happen is, if it's done with this trend and decided to go down, you'll get stuck there. When it reach the valley line and start going up from there, you can buy another one share again. That will lower the average cost when you total those two. But you'll want, that will be your entry point, but then the exit point will be the next new high, which will take a while as well if you touch base with it and start going up from there. But again, when you are not sure, just keep looking at the stock. But that is how you can find stocks, upward stocks, for your watch list. So you will find the stocks, but then you'll use your best judgment to see the trend of the chart to see if it's upward, and you'll mark that on your spreadsheet. And you'll do that for all the stocks on your spreadsheet, your master list. And from there, the one that you'll pick, the certain number that you can analyze daily or so within an hour. And you create a shorter version of that. So during the year, the one that are not working well for you, you'll take notes on the side of it. Toward the end of the year, you take them out of here, you go back to your master list, you analyze them again, and you pick some others to replace them and test those again for a year. Does that make sense? So, and over time, the goal is to be able to have a watch list that you like from that market capitalization that you just trade from. You want to trade stocks, you just analyze stocks from your watch list to see which one are sell well for you to buy, or which one in your portfolio that have gone up well for you to sell. So the next one we are going to analyze is going to be TMUS. So TMUS, T-Mobile, we have those two lines that we like to analyze, buy from. Those are the entry point. Again, in 2024, we traded using short up to launch swing trading strategy, but right now, again, for some years now, it has not come down to this line. So I don't know if this is going to be the new support line for it or not. We know that it touched base here, and a year and a half later it touched base with it, but again, we are almost 2 years in and still somewhere here. So we don't know if this is going to be the new line or if at some point it's going to come down to this. Again, we are not going to take any action. As you can see, we didn't buy it in 2025. So far, we have not purchased it. When I purchase, I like to put arrows to show where I bought it. And then when I sell, I like to put arrow on the top facing down where I sold. So pretty much I put those arrows below or above the bar of that day. But again, when you are not sure, just don't take any action. Just keep observing the chart. The price is drawing a pattern, and sometimes it might be obvious to you to decipher the the overall pattern where it's going, and sometimes it may not be clear enough for you. We all are different. At least for me, I don't do puzzles, so it might take a while before I understand what is going on. But until then, I just don't take any action. Or if you are going to take one, take a measure action, one share. If you get stuck in it, you get stuck in it. Because I do get stuck in some stocks, and I just leave them there. I don't put a stop loss, and I do not sell it at a loss if I can help it. They just get, they just stay in the portfolio until they become positive. For instance, this is color yellow because I purchased it last year and I have not sold it yet. So, but yeah, that is how we find good stocks to swing trade, and large cap stocks that are upward trending, that we can swing trade. And this, for instance, was a stock we purchased with dividend income strategy in mind, and I think it pretty much liquidate the share and pay us for it. At least it didn't bankrupt on us. So that was the strategy I used in 2023. And as those stocks, usually when they become positive, those dividend stocks become positive, I sell them so that I can free more cash to swing trade. And so far, some of them bankrupt on us. Some, I would say one or two, within 2022 and 2025. I think one last year, and the one we just suffered is this year. I think this year, that one and another one, they sold the share. They pay us for the share we have, but because their price were lower, we have a loss in it. But it's still better than bankrupt, because when they bankrupt on you, you lose all your money you use to buy them. So that's something to keep in mind. So that is why you just start small and just go from there. Once you are comfortable with the strategy and the stocks you are trading to make more profits, you just buy more share. You can see, for instance, I have a stock from last year, mid last year, that I have not sold. I have not, let's see, I think we sold this one. Oh, we sold it a year later. I need to take this commitment out of there. So let's go back. For A73 or A74, we sold it for $9.25 a year later for that price. So you just start small. At some point, I started with $100 some years ago, trading using another strategy. And in 2024, when I started swing trading, I target $2,000 per trade. But this year, I'm spending more per trade, but just start small and grow your account slowly from there. So thank you so much for your time. We thank you very much for all your comments. We thank you very much. you all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and Soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just as small until you find a strategy that you can keep repeating and keep making profits and grow your account by putting more money into it, and from the profit you are generating from the trade you are taking as well. Thank you so much for your time. For more of swing trading related videos, will you please check the playlist list in the description of this video. Thank you.